Hi everybody and welcome. In this video I will talk about Russian economy propaganda and try to debunk it. According to the Bank of Russia's work in 2025 report, Elvira Nabulina and her team stated the following. Tightness of monetary policy must restore equilibrium between production capacities and demand. That means that they have too much money in the system, and because of that the same volume of goods and services cost more. For example, if you have $1 and the system can sell you only one loaf of bread, then you can pay $1 for the one loaf of bread. But if you have $2 and the economy can still provide you with one loaf of bread, then you will pay $2 for one loaf of bread. That is obviously inflation of prices of bread and decrease in purchasing power of money. One's economy must strive to increase volume of goods and services produced in economy for them to increase the volume of money in the country, if they aim to conserve value of money and mitigate inflation of prices. But Putin's and Nabulina's plan is to bend the law of economics by, in the same time, decrease loans and mortgages to citizens and increase the loans to business sector in hope that business can expand supply of goods and services and catch up the amount of money in the economy. Silly, very silly, and reckless. This is because of two primary big factors. First is because they steer the money towards military factories to increase supply and catch up to demand from Russian state, and that is not sustainable in the long term for general population. And the second is that they steer money to oil and gas sector, and the Ukrainians keep destroying these refineries, pipelines, ports and hubs. And as a cherry on top, Nabulina said that inflation lowered to its 5-year low while GDP continued to increase, only to contradict herself, and also said the average price of compulsory motor third-party liability insurance certificate for individuals was declining for the second consecutive year, even despite an increase in insurance payment caused by higher prices for spare parts. Nabulina also underscores that the basis for the Russian economy resilience is a strong banking system that has no covert problems, ensures adequate risk management, and has a solid capital cushion that will be sufficient to increase credits and, if needed, provides aid to borrowers. Also, she stated that over 2025, banks earned 3.5 trillion rubles, which is slightly below the amount of 2024, and the banks mostly use their profit to increase capital, which enables them to continue lending to the economy. Additionally, banks pay dividends, including to the budget, from their profits. From 3.5 trillion rubles in profits for 2025, banks accumulated additional capital cushion of 1.3 trillion rubles, and then leaves them with 2.2 trillion rubles to pay in form of dividends to the state budget. That will represent 3% of consolidated budget revenues based on 2025 Russian consolidated budget revenues. This is the aim of banking regulation development and banking supervision measures, Nabulina said in the report. So what is behind that statement? Behind it, it's Nabulina's fear of insolvency crisis in country. She knows that Russian state don't pay their military and other orders because budget does not have the money. Domestic borrowings is not going too well, and Western sanctions restricted foreign investments. Because of that, military and other sectors could not repay commercial loans, suppliers and workers down the supply chain. Insolvency caused by government not paying and military over-ordering reckless policy. According to Nizhny Novgorod Association of Industrialists and Entrepreneurs, companies lack not only investment capital but also working capital, because the debt of buyers to them has exceeded 100 billion rubles. Financial problems are spreading along the chain due to the fact that the main customers, including military industrial companies, delay payment. Rostec, the United Shipbuilding Corporation, Roscosmos, and Rosatom, state-owned companies. And if we calculate the 89 regions of Russia, that is 100 billion rubles multiplied by 89 equals 8.900 billion rubles. that is 12% of consolidated budget revenues in 2025, or almost 5% of GDP. And also, non-payment of wages in Russia reached 1.95 billion rubles at the end of September 2025. Compared to September 2024, the volume of debts quadrupled. And also, Belarusian industrial enterprises, according to the Minister of Industry of Belarus, have unpaid $1 billion for their products in the Russian market for the year. Problems with business liquidity are also reflected in tax statistics. In the first half of 2025, the Russian Federal Tax Service filed claims in courts for the collection of taxes and fees totaling 15 billion rubles, 7 times more than in the same period 2024. Every fourth enterprise reports a sharp non-payment from buyers. That can and will trigger chain insolvency in the economy. The Bank of Russia carried out active work to enhance financial inclusion in the new territories of the Russian Federation. The mechanism of loan repayments holidays for small and medium-sized enterprises become permanent. Yes, you heard right. New territories doesn't have the money to repay loans. And I'm wondering, what is the actual amount of loans given to the new territories? I guess very, very low. That territories had 11 million pre-war population. It is like 10th US state or 14th country in Europe by population. Unthinkable tragedy for the people of the territory. For Nabulina, an essential area is the development of the cashless payments. In terms of their share in payments turnover, Russia surpasses many advanced economies, which is the best confirmation of the high reliability and convenience of payment services and the huge potential of national payment infrastructure that has been created in recent years. But I wonder what is the effect of internet ban on wireless transaction in Russia because of the war in Ukraine. And also, people tend to pay with the cards because they can delay payment when they are out of cash money. And they are out of cash money because their wages are too small to cover cost of living, or they even don't get paid at all. The share of cashless payments were 88% and cash payments were 12% in 2025. For example, EU has cash transactions stood at 52% to 48% of cashless transactions in 2025, and value of the shares are 39% cash versus 61% cashless. The introduction of a digital ruble. Can it be that Nabulina had learned from the best wartime central bank governor, Hitler's Hjalmar Schacht? Can it be that her digital ruble scheme is just the modern version of Hitler's financing of military spending with MAFO bills? In his book The Magic of Money, he explained, Hitler's most urgent task after taking over the government in 1933 was to get rid of unemployment. One of the three methods was the defense program, the building of barracks and the equipping of troops. There was too great a danger that the Reichsbank, in granting direct credit to Reich, would lose control of currency policy. A way had to be found which would ensure that the Reichsbank was able to restrict and limit the amount of money in circulation. The system Reichsbank invented, like Nabulina invented digital ruble, worked in the following way. A company with a paid-up capital of 1 million marks was formed. A quarter of the capital was subscribed by each of the four firms, Siemens, Gatterhofen, Reichenstahl, and Krupps. Suppliers who fulfilled state orders drew up bills of exchange for their goods, and these bills were accepted by the company. This company was given the registered name Metal Research Company, MAFO for the short, and for this reason the bills drawn on it were called MFO bills. The Reich guaranteed all obligations entered into by MAFO and thus also guaranteed the MAFO bills in full. In essence, all the Reichsbank formal requirements were met by this scheme. It was a question of financing the delivery of goods, MAFO bills were therefore commodity bills. The bills were discounted at a uniform rate of 4%. By this means, the MAFO bills were almost given the character of money, and interest-carrying money at that. Banks, saving banks, and firms could hold them in their safes exactly as if they were cash. Over and above this, they provide to be the best of all interest-bearing liquidity investments, in contrast to long-dated securities. In all, MAFO bill credit transactions took place over a period of 4 years and had by 1938 reached a total volume of 12 billion marks. As soon as the banks, in view of the rising demands for credits by the economy and because of the resulting shortages of capital, ceased to be in a position to retain the MFO bills in their portfolios, they presented them to the Reichsbank for discounting. The MAFO transactions had to be suspended. This state of affairs could be foreseen in 1937. The MAFO system was a noteworthy example of the fact that it is possible to make up for a lack of capital by means of credit without any risk of fueling an inflation which causes price rises. In 1948, Hitler instructed not to pay the MAFO bills amounting to 3 billiards, which became due in 1939. Instead, Hitler used state budget means to produce yet more weapons of war and did not shrink back from protesting bankruptcy as if he was really unable to pay, but he was able to pay. The consequences were drastic. Hitler issued an edict which ordered the Reichsbank to grant the Reich all credits for which Führer asked. It is true the MAFO bills were now honored when they become due, but only with the inflated money produced by the printing presses. The second inflation had begun. Improvement of the situation in cross-border payments. The proportion of the US dollar and the euro decreased to less than 15%, which is evidence of sufficient diversification of the system of settlements and lower risk to foreign trade companies. Is it really improvement? Russia is now trading heavily in Indian rupee and having issues because there is more Indian demand for Russian goods than the other way around, meaning Russia has been saddled up to $1 billion worth of rupees each month that stuck in Indian banks and adds up to $147 billion in Russia's net foreign assets build-up from 2022, according to Bloomberg calculations based on Bank of Russia data. And now Russia has a problem using the rupees and repatriating the currency. Because of that, Russia's largest bank, Sber, has already opened rupee accounts, issued rupee-denominated loans, and expanded its network to India. According to Sberbank, up to 70% of Russian exports to India are now settled in rupees. Russia is expanding its banking presence in Delhi, Mumbai, and Bengaluru as part of its commitment to financial integration. Also, the Central Bank of Russia has opened a representative office in Mumbai, India. And that is a Russian desperate move. They print new rubles in Central Bank of Russia branch in India and give them to the VTB and Sberbank branches in India in form of loans. Then banks exchange, or better say buy, rupees from Russian exporters for investments in Indian economy. The fourth one in these circumstances. Then Russian oil and gas exporters can get their cash liquidity in rubles to pay the wages for Russian workers and to pay the Russian suppliers. And that is officially called foreign exchange in fancy PDF reports. But in the real world, Russia can't use export money in rupees. Rupees are not world-accepted currency, and they only can use it inside India. And of course, because Central Bank of Russia is forced to print more money, this money supply is going to affect inflation in Russia. The only way to avoid inflation is for Russian Central Bank to sterilize the ruble supply. But then the non-payment epidemic is almost certain, starting with wages and credit loan repayments and spreading to the whole economy, to companies and farmers. Monetary and fiscal policies and their mutual influence. The announced tax policy changes of 2026 will certainly affect price growth, but over the medium-term horizon, their influence will be disinflationary. Although at the first stage the tax changes will have a pro-inflationary effect, it will be transitory. Inflation will accelerate for a while. Nevertheless, the increase in taxes will not become a source of permanent inflationary pressures, but will rather help balance the budget instead of raising more borrowings to finance the deficit. The draft budget for 2026-2028 assumes that the expansionary effect of fiscal policy and demand will be weakening, which, among other things, will enable the Bank of Russia to ease its monetary policy. Nebulina already lowered the Russian central bank key rate from 16% in the end of 2025 to 15.5% in February 2026, to 15% in March 2026, and to 14.5% in April. That will lower interest cost of companies, but will it be enough to save the economy and the liquidity of companies? I think not, because these savings will go straight to increased tax obligations that companies now must pay to the Russian state budget. The largest companies were increasing outstanding debts to banks faster than the corporate segment as a whole. In order to limit risk associated with growing debts of highly leveraged businesses, from 1st of April 2025, the Bank of Russia obliged banks to increase their capital buffers when issuing new loans to such borrowers. In 2025, these requirements did not involve a considerable burden on banks' capital or significant effect on overall lending dynamics, but only urged credit institutions to assess risk more accurately. The expected decrease in inflation and the key rate will help reduce companies' debt burden. In order to encourage banks to help borrowers experiencing temporary hardships more actively, the regulator allowed them not to create additional provisions when restructuring outstanding loans of companies, having a realistic financial stability recovery plan for the next 3 years. As for retail lending, in 2025, the Bank of Russia continued to restrict lending to borrowers with high debt service to income ratios. As a result, 2025, the share of banks' loans issued to borrowers with debt to income ratio about 50% contracted 1.5 times as compared to 2024. Owing to the Bank of Russia's efficient policy aiming to limit lending to such borrowers, the proportions of problem loans remained moderate. Here we can see that Nebulina knows that in the future the non-payment in Russia is unavailable. Non-payment of wages as a consequence of non-payment of state to military corporations, and non-payment of military corporations to the suppliers, and non-payment of wages to workers by suppliers, and even layoffs of workers. The maximum ratio of total interest and fees charged on consumer microloans decreased from 130% to 100% from April 2026, which will make these microloans cheaper from consumers. Everybody in Europe will be laughing out loud if their bank offers them loan with 100% interest and fees. Although every country in Europe has different rules, the charge interest and fees cannot exceed 2x average loans interest fee, and about 8% in 2025, or for another example, 12% in Germany. There we can see how big is the problem with money shortage in Russian population and small businesses owners. They are ready to pay 130% on top of the loan's amount just to get the cash funds. What do you think about that hidden message from our Russian central bank? Write me in the comments. See you in the next video.